Hey everyone, and happy Tuesday! It is February 1st, and of course, I am going to come to you with Mortgage Tip Tuesday with It's Your Girl, hashtag JLoan! Happy Tuesday, happy February 1st. I hope that you had a fantastic January, and now we're off to February. So, of course, today's significance among many is National Get Up Day, okay? And National Get Up Day is a day that states we all fall, but it's how we get up that really truly matters. It's a day about being fearless in the face of falling down. So today, I want you to celebrate your own get up. Okay, so we've all been there. I've been there. We've all been through something. We've all fallen. We've all gotten back up, and some of us may be in that right now. So, of course, I have to translate this to the mortgage business. So, I'm going to teach you because there's still time in 2022 for you to get up and find a way to get you into owning your own home for the first time. And maybe you'll be the first in your family. Maybe you won't be the first in your family, but maybe this will be a huge accomplishment for you to, of course, build financial freedom and have something that you could pass down to your kids, or use it as an investment tool for your future, okay? So I want to talk about what you should do starting now, okay? If you want to buy a home by the end of this year, or by the beginning of 2023, the first thing you need to do is you need to check your credit, okay? You got to take all the embarrassment or whatever it may be. Even if you think you have great credit, I always tell people you have to check your credit at least 10 to 12 months, because the worst thing we can tell you is everything looks great, don't make any changes. But a lot of the times, if you are not using some sort of credit monitoring, a lot of times I pull credit on borrowers who believe they have excellent credit and never knew that there was a collection that popped up on there. And if you wait till right before you're getting ready to purchase, you don't have the time to get it removed or pay it and things of that sort, if they'll even remove it. So you have to give yourself time to really do that. And I highly, highly recommend that you do use some sort of credit monitoring, because it is the best thing that I have ever done. It alerts me on every pull, every, like if I use a credit card, it'll tell me, hey, your balance changed. So if someone's really trying to hack me or steal my identity, I know right away. So it's worth the investment for you to really monitor your credit, okay? The second thing that you should do is you really need to figure out your budget. And you need to figure out your budget because it's the first question that any loan officer, a good loan officer, is going to ask you when you call. The first question we're going to say is, hey, what is your monthly max comfortable payment that you want to pay? Now, sometimes people can qualify for a $4,000 mortgage, but that doesn't necessarily mean that that's what they want, because remember, we go by debts that we see on your credit report, and then things like child support that may not be on there, or any type of alimony, things of that sort. But there's also bills that you have that we don't count, like your cell phone bills, your water bills, new tires. There's things that we don't account for. And so you know what you spend on a monthly basis, and it's very important for you to know, hey, what are we comfortable paying? So that when you come to purchase a home, I try to keep you in line with your goals. And obviously the market changed that, because as inflated prices continue to rise, what borrowers want to spend is changing, because they're just not able to find a home sometimes for what they want. But those are very unique situations, but you still need to have a cap to say, hey, I don't want to go above this because it's going to mess with either my savings or our monthly budget, and it'll put us in stress. And again, I never want you to have to revert to credit cards to pay for your bills, because it builds a bad cycle that is hard to get out of sometimes, okay? So number 3, your assets and your savings. The big question we ask is, how much do you have and how much do you want to invest? And it's a 2-part question that I ask, because just because you have $15,000 in the bank doesn't necessarily mean that you want to invest $15,000 on your home purchase. So it is a two-part question. And I tell my borrowers, be real. If you don't have anything saved right now, this is why we start 10 to 12 months, because we have the time to say, hey, if you're getting commission or tips, or you're working Uber, even if we can't use that second job income that's self-employed because you haven't been there 2 years, you can still work a second job and use all of those assets, all of that income you're getting, as assets for a down payment. But if you don't know where to start because you won't pick up the phone, you don't know how to save the amount of money that you're going to need. So it's very important for you to save and know how much of that saving you're willing to invest. And by talking to a mortgage loan officer, you're able to really discuss, are there programs that are available for you as a first-time home buyer? If there's any grants that you qualify for. These are all things, by speaking to a loan officer, you're able to know that information. But again, you have to pick up your phone, okay? And then number 4, it says get pre-approved a minimum of 4 months out. And the reason why I say 4 months out is because your credit report lasts 4 months. And so if we can get you pre-approved, you're ready to go home shopping, and we don't have to pull your credit again. But you could really start this process. You really should start this process at least 12 months out. And then when you're ready to make that move, that's when you really do get pre-approved so that you can get that letter. I'm telling you, in this market, it is so competitive. You want to make sure you have this in line. You don't get pre-approved at an open house, okay? You're moving in reverse. You must know what you qualify for before you start actively looking for homes, because you may be looking at a home that you don't qualify for. And unfortunately, once you've seen that home, maybe nothing else compares if you like it. So don't do that. Don't do that to yourself. Do it the right way, which is, you don't kind of window shop in home loans, right? You go, you find out what you qualify for, and then you shop within your budget. I tell clients all the time, your first home may not be your dream home, but that first home, if you hold on to it long enough, is going to build equity. And with that equity, you can sell your home later and buy the house of your dreams. So again, you don't have to go into the first home with believing that this is everything that you wanted. It's something that you own, something you didn't own before, and something that you are building a financial asset for you and your family and their future, and your future for that matter. So today again, is National Get Up Day. We're going to get up. It doesn't matter what you've been through, whether it's a divorce, bad credit, bankruptcy, any of those things. You got to get up and you got to make that call. You got to do the things that are going to get you in the steps to getting back on your feet. And if homeownership is in your dreams, you need to make that call, okay? So until next Tuesday, I hope that you have a fantastic week. We're supposed to get some cold weather here, so I want everyone to be safe. And of course, I want you to be blessed. Have a fantastic week. Bye-bye.